You would think that the market would get bigger than it is now, but I guess ultimately it's between two worlds. On one hand, like you said, the dollars are moving around faster. People price things in dollars; they don't price things in gold.
Yeah.
They have liability. Many of them have liabilities in dollars, and so that's kind of the world. That's one side. Another side, if they're thinking long-term store of value, many people that have crossed the chasm into the world of digital assets would rather own Bitcoin than gold, especially at scale.
Yeah.
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discusses Bitcoin and crypto. As per Lyn Alden's analysis, Bitcoin is a highly versatile and secure form of digital currency that allows for global transactions and provides protection against censorship. It also offers users the ability to have full control over their own funds. With the potential to become one of the largest monetary systems globally, many see Bitcoin as an attractive option for transferring large sums of money across borders. Its liquidity, security, and network effects make it a preferred choice for both individuals and institutions. According to Alden, volatility plays a crucial role in the growth of Bitcoin. It provides opportunities for potential gains and encourages adoption. To assess the health of the Bitcoin network, Alden considers factors such as price, liquidity, and network effects. She also looks at the development of global hubs, where Bitcoin enthusiasts are actively building communities and companies. Alden expresses a positive outlook on the future of Bitcoin, highlighting the global community of individuals with a shared vision from various countries and regions, and lots of things Lyn Alden discusses. So please watch the video to end and share this video, and subscribe our channel Everyday Finance. Thanks.
That's available worldwide instead of just on
Yeah.
a specific U.S. exchange, which is a useful thing to be out there. You would think that the market would get bigger than it is now, but I guess ultimately it's between two worlds. On one hand, like you said, the dollars are moving around faster. People price things in dollars; they don't price things in gold.
Yeah.
They have liability. Many of them have liabilities in dollars, and so that's kind of the world. That's one side. Another side, if they're thinking long-term store of value, many people that have crossed the chasm into the world of digital assets would rather own Bitcoin than gold, especially at scale.
Yeah.
And so gold's kind of serving a niche. I think it's good that it's out there. The market can choose it, but I guess it's just not hitting liquidity kind of critical mass. It's not appealing to people enough. Yeah, so that's my base case. The market's gone through these cycles where they priced in a bunch of cuts that never happened. Now they're pricing in mild cuts going forward, and I think that's a fairly rational approach. We're kind of, for a while now we saw pretty dislocated markets. So, in the U.S., for example, manufacturing was weak. Obviously, commercial real estate was weak, but a lot of the labor stuff was really strong. A lot of the consumer spending was really strong. And what we've seen in the past couple months is the labor market has softened, and the consumer spending is softened, and so that kind of that final leg that was kind of holding things up particularly strong is weakening a little bit, and so my expectation is we probably have later this year and into early next year probably some rate cuts ahead. And one of the things I point out though is that much like how the U.S. economy was fairly insensitive to rate hikes, there's a good chance it's going to be fairly insensitive to rate cuts. So basically, the U.S., more than most other countries, locked in a lot of long duration fixed rate mortgage debt, compared to most other countries in the world. And also, our corporations tend to borrow from the bond market more than banks at a higher rate than other countries. And so, our private sector tends to lock in this fixed rate debt wherever possible. It's kind of how our markets are structured. And so, combined with the amount of fiscal deficits that are happening and the fact that the government's debt, ironically, refinances at these higher rates more quickly than the average private sector, we've had a situation where there are some parts of the economy that are very punished by the higher rates, such as commercial real estate or small businesses that are relying on bank loans. But those big chunks of the economy have been fairly resilient to the rate hikes. And if they do trim by a handful of basis points, it doesn't mean that we're going to get any sort of mortgage refinancing wave of any meaningful scale, because not that many people locked in these high mortgage rates. And so I think there's only kind of around the margins would that be helpful to a number of businesses. And so I think this can be fairly uneventful. And I think the bigger story is fiscal. So fiscal dominance, fiscal deficits, any sort of fiscal decisions by Congress and the president. I think all of that in this particular era matters a lot more than central banking does, even though central banking is still variable.
And do you think
I'd
the
like to
markets will
hear.
also be? Oh, go ahead, Samson.
I want to go back and hear Lyn's take on the Trump Bitcoin support.
Sure. So, well, it's interesting. One option he has is just to not do what Germany did, which is to say, the United States government has something like 200,000 Bitcoin. So
Yeah.
whatever law requires them selling them, override that law. Change whatever has to be changed, and say just to hold that amount. Then you have 1% of Bitcoins. That's kind of the low hanging fruit. Or just if they do sell them, just offset that with purchases. It's certainly within his purview, to make that change happen should he want to. If they could do it in an amount that is at current prices not particularly meaningful or risky to the U.S. government, should they be concerned around the downside. Um, the a bigger story there is that in Trump's first term, he had a mix of people. Some of them were in favor of dollar devaluation, and some of them were in favor of kind of holding the dollar where it is. Um, and because he had a goal of reducing the trade deficit, and he did the tariffs, and they didn't really do much to actually affect the trade deficit. It's still there, it's still growing. The second term, the similar voices he's going to have, from the dollar devaluation side. There was an interview not that long ago, as it was in like late June, I think it was, with Bloomberg with Trump, and they asked him about the state of the economy, and the first thing he does is go into like relative currency differentials with Japan and China, which is normally not what you'd hear out of a Trump description of the economy. So basically, currency is top of mind, for the president, for the vice president, and for his former trade, representative. And so I think there's a higher chance in the second term they'd have some more meaningful kind of currency interventions. And one of the methods of currency weakening is reserve accumulation. You can create more of your, currency units. Basically, you're doing what MicroStrategy did, except it's the government's currency instead of their equity. They create more currency units, and they use it to buy reserve assets. Is something that a lot of, trade surplus nations do on a regular basis to prevent their currency from increasing. And with some of these people in administration, it's not out of the realm of possibility they could include Bitcoin as part of their reserve accumulation if they wanted to go that approach. And I'm not saying it's going to happen, but I think the voices that would point to something like that are probably going to be a little bit stronger in the second term, if a second term happens compared to the first term.
Not surprisingly, market participants displayed a great deal of optimism due to the popularity of trader Benjamin Cowen. I was optimistic that the 20-week simple moving average at $65,000 would act as a support level in the future. BTC made a significant upward move from the lower trend line and crossed above its BSB, as mentioned in a post on X. Now, let's observe if BTC can maintain its position above the 20-week moving average. Experienced trader and analyst Devastated, meanwhile, Capital emphasized the relatively minor nature of Bitcoin's correction since reaching new all-time highs in March on monthly time frames. They noted that BTC had successfully tested its previous 2021 all-time high as support, which is part of an ongoing resistance. Sell support. The remarkable retest of the previous all-time high resistance has now become a significant new level of support, which was highlighted by the analyst along with a helpful chart. Bitcoin has successfully retested a crucial region as new support for 5 consecutive months, indicating the extent of the crypto recovery. The sentiment in the market has reached its greediest point in over a month, as measured by the Crypto Fear and Greed Index. This index uses various factors to calculate an overall mood score for the crypto markets. Just a week ago, the index was at a low of 251, indicating extreme fear in the market. Traders. Market Outlook. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance. And we will meet in next video. Thanks.
The downside, basically, the complication right now is that he wants to fix the trade deficit, reshore manufacturing, but also both Trump and the, Republican Party, their official position is they want to reduce inflation. But one of the risks, one of the high likelihood risks of dollar devaluation, reshoring, and reserve accumulation is a period of inflation with that. So I generally lean toward ongoing waves of inflation, in the next term, let's call it. And that's kind of my view, regardless of the election outcome. But then obviously certain election outcomes and then certain decisions by who wins can pull that forward, can make it larger. So, but yeah, that's basically that's the whole kind of downside of currency devaluation in the first place. Is depending on how someone's looking at the economy, there are issues when you have an artificially strong currency, which is different than sound money. It's kind of like this wonky situation of kind of having a debt-based currency. You can have an artificially strong currency, or you can have an artificially weak currency, and there's different kind of pros and cons that for a particular economy that come with that. And if they do engage in the approach of saying the dollar's too strong, we want to weaken it, we want to have better trade deals, the biggest risk factor for that is inflation. Yeah, that would be basically a more balanced economy right now, because the dollar and dollar denominated assets like treasuries are at the heart of the system. It means, most currencies trade on kind of trade balance differentials and interest rate differentials. Those are kind of the main components that affect relative currency valuations. The dollar has an extra layer of a monetary premium on top of those variables because so many countries just hold it as the most liquid, reserve asset around. And what that does is that gives an extra boost to American imports and an extra kind of downside to American exports. And so for decades, you had the situation of we run structural trade deficits with the world for a longer period of time and at bigger scale than almost any other country. And then the rest of the world takes their dollar surpluses and buys our assets with them. They buy our treasuries and they shifted more toward buying our equities. To some extent, they buy our real estate, but our equities and our treasuries are kind of the main things they like to buy. And that gives America, that's really good for Wall Street. That's really good for DC. That's really good for tech. That's really good for hegemony, like sanctioning any country you want, all those types of things. But the main cost of that whole system is deindustrialization. That your domestic lower margin manufacturing sector
That's
is
right.
so much
Yeah.
weaker. And I think that basically the downsides have gotten to enough kind of pushback. Now we're starting to get more populist candidates that kind of question the structure of the system, or we get, the military pointing out how much their supply chains are compromised by decades of this kind of shift of physical capital, human capital. And so yeah, there are kind of a pendulum swing actions that could pull some of that back. Um, they are generally inflationary, and I think the risk is that they take a lot longer than people think. You can't just flip a switch, bring all the manufacturing home. There's a lot of human capital, basically technicians, know-how that kind of, we invested everything into finance, not into building stuff, and that does take years of building and retraining. So it's a process.
Joe Biden surprised the markets by announcing the end of his re-election campaign on Sunday, July. According to some analysts, the president's decision to withdraw from the election race could potentially have a positive impact on Bitcoin and other crypto assets in the upcoming months. However, there are others who advise investors to remain cautious and not get too carried away with excitement. As a result of the announcement, the price of Bitcoin experienced a slight dip of 2.8%, reaching a low of $65,100. It quickly rebounded by over 3.6% at the time of publication, as per TradingView data. Biden's sudden move was seen as a positive development for crypto assets. Josh Gilbert, an analyst at Toro Market, stated that Trump's increased chances of re-election would greatly benefit the asset class. As we observe Trump maintaining a lead in the election odds, the value of crypto assets will increasingly reflect his potential victory. This correlation poses a challenge to predict. Imagine Kamala Harris or another Democratic candidate potentially surpassing Trump's current lead in the polls with only 3 months remaining in this election race. However, it's important to remember that a lot can occur within that time period, so anything is possible. He elaborated on the topic. In recent times, there has been a significant focus on Bitcoin and cryptocurrencies in relation to Trump's election campaign. On June 14th, Trump stated that if he were elected president, he would put an end to the Biden administration's negative stance towards crypto. Marcus Thielen, the founder of 10x Research, has even suggested that a crypto-friendly Trump might announce Bitcoin as a strategic reserve asset for the US government at the upcoming Bitcoin 200-224 conference in Nashville, Tennessee. However, some analysts believe that the recent developments related to Biden may not result in an immediate surge for crypto stocks. A cautionary note was sounded by P-Hundle, highlighting that although Biden's withdrawal may potentially benefit Trump's chances, it is challenging to establish a direct correlation between this event and the recent increase in cryptocurrency prices. Drawing lessons from the Bitcoin ETF experience, it is possible that prices could temporarily plateau before resuming their upward trend. P-Hundle suggested that the recent surge might be driven by speculation surrounding an early Ethereum ETF and advised investors to exercise caution and avoid excessive excitement in the short term. Let's get back to Lyn Alden interview.